What are we navigating today?
Well, the Dow is still the people's index, right? And we're going to talk about a Dow component right now.
The Volks Dow.
Yeah, there you go. All right. So Apple, speaking of Dow components and everything else, shares are down 10% so far this year. Now, some are suggesting that the stock may actually be a bargain, given what we've seen so far. But your next guest begs to differ and thinks even at current valuations, Apple may be tough to justify here. We're talking to Tony Zhang. He's the chief strategist over at Options Play, and he's here to give us his more bearish outlook on those shares. Tony, Apple's been one of the better performers among Mag 7 stocks since the recent NASDAQ bottoming. People like it. Why don't you?
Yeah, I completely understand. Because of the headwinds that Apple continues to face, despite the recent sell-off that we're seeing here, iPhone 16 sales have been really underwhelming. They've really fumbled the rollout of Apple Intelligence, now to the point where the iPhone 17 is likely not going to have some of the features that they were talking about last year for the 16. And then really they've staked their entire future on augmented reality with the Vision Pro. And at this point, it's not really clear that they're a leader in that particular space in either the hardware or the software side of things. So I think it's becoming increasingly difficult to justify the nearly 30 times forward earnings that Apple's trading at, given that we're heading into an environment where the consumer is clearly being a lot more selective in terms of spending. And, the next iPhone 17 upgrade cycle, I'm not sure is going to be the big driver of sales that iPhones have historically been for Apple. And I think that given the rally that we've seen a little bit here over the last couple of days in Apple as it approaches that 220 level, it just makes sense from a timing perspective that that it's about time to potentially add some bearish exposure here to Apple that aligns with the broader story here, which is the fact that valuations remain quite elevated relative to the S&P 500.
All right, so Tony, navigate us, if you will, through the trade. If you have a more bearish outlook, at least kind of near to medium term, how exactly do you express that?
Yeah, I think that, as you say, it's hard to be bearish on Apple. So I think the right trade structure here from an options perspective is to sell a call spread. And what that allows you to do is take a neutral to bearish view here for Apple. So even if it just stays put here and doesn't move much higher, you'll be able to profit. And I'm going out to the May 2nd weekly expiration, and I'm looking at selling the 225 240 call spread. Earlier today, you can collect a little over, just a little under $5.50 for that call spread. And that allows you to basically collect some premium in this more volatile environment and be profitable even if Apple just stay here. But overall, my expectation is for Apple to potentially fail at this major support resistance level and potentially start trading lower from here.
All right, Tony Zhang with the more bearish outlook there, at least near term, medium term on Apple shares. Thank you for that. We'll see you again soon.